of Enam Holdings is with us now. Sridhar, hi, good morning.
Good morning.
So, yeah, but this bear market that we have going for some time now, you see any sign of that ending, or are we in for more pain?
So it's really tough to call whether we are in for more pain or things will change from here. Our broad belief is that this is a cyclical slowdown that we are seeing, and we are seeing a lot of opportunities in the market. Is this the end of the bad news? We think this quarter could be possibly the worst because already based on the numbers that we are seeing and what we're hearing from on the ground, that we could see significantly worse numbers this quarter. Hopefully with the festive season, the quarter after that, we could see some improvement. Also keep in mind that the base effect itself coming into the next year will start to improve. So we think that we are somewhere close to the bottom. We don't know exactly where.
Are you shopping?
Yes, we are. So, we saw statistics recently that out of the roughly 2,800 stocks that trade in the market, 65% of them are down more than 50%, and another 25% are down between 25 and 50%. So, even though the index is giving a different picture, there has been carnage in the broader market. And we think that there are a lot of opportunities in the broader market. That's where we are shopping right now. Because some of them are good brands or good company, good business model, and maybe going through some cyclical slowdown right now or some other issues. So I think that's where the opportunity is. Does it mean that everything turns around tomorrow and the stocks start performing? I think you'll need a lot of patience. So I think we do have patience. We are hoping that the strategy works. We're keeping our fingers crossed.
Okay, I think you should come to our studios more often. I mean, if it brings this amount of green on the screen, right? But jokes apart, Sridhar, morning, do you think in your interaction with retail investors, are you getting a sense that the equity cult has been damaged or is dying? Or is that too alarmist a statement right now?
Actually, no. I mean, especially when I meet my friends who are doing regular SIPs, they seem to be of the view that if I don't continue my SIP, how do I get a better average? So I think what we're also seeing from the mutual fund numbers, it suggests that at least the retail investor who's using a SIP model seems to be continuing irrespective of how the market's behaving. I think the pain is more with the HNIs and the larger investors who understand the market a bit and have tried little bit of their own stunt, which is trying to be a bit yes. So that's where the issue is, but they do form a large part of the market. So that's where we are seeing more pain. I think the retail investor, at least from what we are seeing from the mutual fund data and my own personal interaction, seems to be that they want to continue with the mutual fund, SIPs at least as of now. That's how it seems to be.
Okay, by the way, just look at IDFC First Bank. After starting in the red, it's now moved into the green and 3% higher now on that stock. So perhaps some short covering is what you're seeing. Today the market's mood in general is slightly better, so that's the interest. Yeah, also helping. In large financials, Sridhar, there was a complaint that the market had too much of financials and the weight was just way too much. You think some of that has got corrected, but do you think more correction is needed?
No, I think whenever we've seen in the past also when any particular index moves too much, I think there's a natural correction which happens because normally there is an over exuberance in the market. Some of it comes because of that. I think some bit of natural correction will happen, but keep in mind that financials will always dominate this market because that's how the Indian index is construed. And keep in mind that financials generally are underpenetrated as a product in general. So I don't see financials, I don't have any issues with financials being a large part of the index as long as there's a bit more rationality in it.
Can you give some color when you said that yes, you are shopping? You answered immediately when I asked you.
Yes.
What kind? Is it FMCG? Auto financiers like Chola and Shriram have done well today.
Yeah, so Lata, it's not sector specific. It's very stock specific. Like there've been instances in the past. If I go back to say 2013, where we were coming out of the Fragile Five, and you were actually playing a cyclical game. It was very easy that you take a call that, Raghuram Rajan had done a good job, inflation would come down. You take a cyclical call and just buy the cyclicals in India and ride through it.
Yeah, there was a trading even in PSU banks.
So it was a very easy cyclical trade to play in that year. This is very stock specific, because within the sector you're seeing companies having lesser problem versus more problem. But I would say broadly that I've said in the past also, we think autos are an interesting space to look at. Auto ancillaries are interesting space to look at. We are seeing opportunities, say, in chemicals, in some commodities like, say, in cement, multiple sectors. So I'm not able to give a particular answer that this should be the sector.
Actually, I'm glad you're talking about consumption, because this quarter the standout performance has come in the FMCG space, from companies like, say, Dabur and Asian Paints, even HUL for that matter.
Right.
I mean, the outlook was cautious, but the numbers were not bad.
Right.
Margins actually expanded.
Yes.
You think it makes sense to put more money to work here?
So consumption is surely a space. We are looking at more discretionary than staples, given with the obvious reason that the staples, the valuations are very high. So we've seen even now that companies with very high valuation and some disappointment, the correction is much faster than we can anticipate. So the risk reward is much lesser there. So we are looking at more discretionary or durables consumption, but not necessarily in the staples space.
Okay.
But that is an opportunity that we're looking at.
Okay. Financials, we began this quarter expecting that they will do well simply because so much of recognition had already happened. But we keep getting bad news. We get these new NBFC problems. And then we had all those loans against shares, Eveready, Cox and Kings types. So should we still keep the faith? Would you buy corporate banks? I think you were positive when we last met.
Yes, so we continue to be positive. In fact, I met a banker yesterday. I think the good news is a lot of these problems that you're saying, a lot of resolution is happening on the backside, which we are not seeing right now.
Okay.
I don't have any information even from them, but the sense I got is that resolutions are happening on the backside. We know, like yesterday, one of the company was on your channel and he said that by 31st of July, there'll be some resolution. Similarly, there are other resolutions in play in the market. So currently we're at the peak of the bad news. So it seems like everything is bad and the entire loan will become a default and nothing will be recovered. Yes, there will be some default, but I think the recovery will be better than what the market is today anticipating, because today the anticipation is the worst. So I think from that perspective, yes, when economy is slowing down, we will get more NPAs. But the extent of NPAs that we've seen in the last 5 years, it is very difficult to replicate that. If that happens, then all bets are off. I think these are incremental NPAs because of the slowdown, because of some of the mistakes the promoters have made. But we still remain positive on corporate banks.
Yeah, no, the point was that when I was having a conversation of the numbers, I said, what, another 1 lakh crore? Another person said, no, it can be 2 lakh crore in NBFCs and another 1 lakh crore in non-NBFCs. You don't expect such a gory picture.
So Lata, it's possible that initially there could be an NPA, like some of these NBFCs, if there is a resolution plan that comes up, a lot of them will have to mark them as NPA first. And then the resolution kicks in.
And the recovery kicks in.
Yes, then the recovery happens. So there could be a possibility, but I don't believe that whatever is declared as NPA will become a complete write-off, because there is a resolution plan behind.
Okay.
So which is why my positiveness that there could be some bad news, which is what is anticipated.
Sure.
But today the anticipation is the worst news. And at least my sense, speaking to bankers who are in deep discussion on some of the resolution, is that it may be much better than what the market's anticipating.
Okay. My final question, has the broader market corrected enough? In 2017, the problem was that there was, it's tough to, buy. Multi-bagger was the word which was used, and now, we don't use it at all. So has this space corrected enough now?
So I started in my markets in 94 and I saw 6 years of bear market, 94 to 99. And I would have anticipated after 2 years of bear market that a lot of correction has happened and now things will improve. So as I say, my base is started with a very, one of the most rigorous bear markets. So I really think, I hope it is not a repeat of that, which is the 6-year bear market. But I think the correction has been so steep in the last, say, 18 months, that I would want to believe that there isn't much correction left. And we're just hoping that is the case. So you don't buy your portfolio on day one. you stagger it, you want a price trigger, and there are bad days when you get some of those prices.
So are there any other options? I mean, people are now starting to talk about, raising cash levels, investing in debt, investing in gold, real estate. I mean, this word has come back after a very long time. What are you advising?
So I think from a asset allocation standpoint, it's good to have a diversified portfolio, right? Even I personally have gold, which hasn't done well for 5 years, but doesn't mean that because it's not doing well, I will give up that asset class, because it was meant to be an asset allocation decision. So I think asset allocation is always good to have in your portfolio, but equity over a period of time we've seen will always give better returns than any of the others.
So you're sticking with it. You're not diversifying into bonds because you're expecting.
So Lata, that opportunity, when you're doing an asset allocation, you can't have everything in equity, right? So you would have bonds. In fact, I would say that many of the corporate bond funds are looking very interesting. Keep in mind that they have written off many of these papers. If the resolution happens, there will be write-backs. So it is not for somebody who doesn't understand the corporate bond market. But if you do understand, and if you can see that some of these papers are written to zero, and resolutions are in place, like one of them said on your channel yesterday, a lot of the funds who are holding this may have to write back because they've already written it to zero or whatever, to 50% down. So I think those are opportunities. So I'm not saying corporate bond is not an opportunity. As an asset allocation, you would want to.
Credit risk NAVs perhaps are at attractive levels. I wouldn't know, but that's what you're hinting at, I would assume. Thank you very much, Sridhar, and do keep dropping in often. We have not seen so much green in quite some time now. It's like 0.5% higher on any index you can pick.